Good morning, everyone, and welcome back to the Broker Breakdown. It feels like we've been missing in action for the last little bit, but there's been a lot of things going on in the world of insurance and realistically a lot of industries. But the first thing I kind of wanted to get to is there's been a major shift or a major change in the podcast where Mike is no longer a part of the podcast. We kind of took a large break during the summertime, especially during August, and we kind of were just looking at things and kind of seeing what the future of this podcast held. And he's decided that he no longer wants to be a part of the podcast. But I just wanted to thank Mike for well over a year and a half of being my co-host. It's been super fun every week coming on and obviously doing these episodes with him. And I hope one day that he would like to come back. I would definitely welcome back if he ever did want to come back, maybe as a special guest co-host or something like that. But I just wanted to thank him for the last year and a half that obviously we've done these podcasts. So, but yeah, that's kind of where we're at right now. There's going to be a lot of changes that are going to be coming down the pipeline as obviously I take full control of the podcast. I don't know right now all the answers to those questions. If we're going to be going more towards a monthly episode where we have guests on every episode, if we get another co-host from someone that I can trust and want to do another podcast with. Again, those answers are not really there yet, but when they are, I will definitely make those public and people will be more aware of what's going on. But as of right now, I think what we'll be doing moving forward for the foreseeable future is until we kind of get that more stability, we will be doing more of a monthly podcast where we have a special guest on every month, including this video. And yeah, that's kind of where I think we're going to be going, at least for the next month or so. But anyways, moving on from that, we have a guest on. He's been on the podcast earlier this summer, but again, with all the kind of changes that have been going on in the world of mortgages and real estate and how that kind of ties back to insurance, I did want to invite him back on again because I do think it's a huge talking point in today's world, because I think a lot of people obviously can relate to this topic and they have a lot of talking points. So I want to welcome back Alex to the podcast.
Thank you very much for having me. Glad to be back.
Yeah, it's been a few months. I think we had you on in May, correct?
Yep, that's right.
Perfect. Yeah, so it's been about 4 months or so. And obviously we've seen over the summer months there's been basically announcements of rate increases from the Bank of Canada, or maybe not a rate increase as we saw in September, but still they've been basically announcing new things every single month. Kind of, how's the last 4 months been in your world?
Yeah, I mean, it's a lot of changes, like you just mentioned. We're in Canada, so we're seeing, changes specific to the Bank of Canada and some of the economic changes here in Canada. But really, we're seeing it changes United States and all over the world. But specifically to Canada, the real estate market has taken a shift in this last year. We've seen interest rates obviously rise, to levels we haven't seen since 2001. We saw interest rates not only rise, but at rapidly rise, and that caught a lot of people off guard. So in that happening, we did see real estate home prices fall quite a bit from February of last year. But then in the last, I would say, April, May, June, we started to see a little bit of a rebound. And now we're starting to see more stabilization. So those prices come back down a little bit. We saw the biggest drops, I would say, in the Hamilton areas. I guess what you would say is outside of the GTA, because obviously there's a little bit more demand for people in the GTA and areas in the GTA. So yeah, we've definitely seen huge changes because of those interest rate hikes. And that all is due to inflation and what's happening with inflation, not only in Canada, but around the world. Thankfully, over the last 3 or 4 months, we've seen that inflation number come down, the year-over-year inflation number and the core inflation number. So that is a good indicator of sort of what's to come. But with that being said, we could always see that go back up, right? So we have to be very careful. And the Bank of Canada, who controls the interest rates, they're trying to be very careful, and they're a little bit more, I guess you would say, pessimistic about that inflation being sort of stuck. So they want to really get that down to their 2 to 3% target. And the way they do that is by raising interest rates. And those interest rates have effect on the entire market. So that's sort of what we're seeing right now as a quick little synopsis. But yeah, it's been an interesting market, that's for sure.
Yeah, I was telling you kind of right before we started here that I have seen a trend even in my clients where I've seen a lot of people just go into the rental market because they can't get into owning a property right now, and it's unfortunate. I actually just read a thing on LinkedIn before we came on, and it was kind of funny because it was just like it was a post from Bloomberg, and it was saying Canadians want lower home prices, and I'm like, oh, well, yeah, that'd be great, right? Like we all wish and hope for lower prices based on everything, but yeah, it just I found a lot of, like, especially over the summertime, a lot of my clients have been just moving more towards the rental market because obviously you need somewhere to live. And if you can't buy a home, what's the next option, right? You have to move into the rental market.
Absolutely. Absolutely. It's been tough for a lot of people, I would say, because most people, when they're looking to buy or rent, you want to get what's best for you and your family, right? And so a lot of the people who wanted to buy a home we're then realizing, okay, it's probably a little bit too expensive for me right now. And then, so they look at the rental market. But because home prices are so expensive, the demand for the rental market and all the rental units, homes, all of the available options, the prices have skyrocketed. So, you know, you're sort of it's a double-edged sword. What are you going to do? You're going to buy a home and take on those costs, at least maybe build up some equity? Or are you going to rent for a little bit cheaper, but not have any equity there? So it's getting really tough, where I think in the last 10 years, it wasn't exactly like that. If you didn't buy a home, you could find a suitable rental that you could live in pretty comfortably.
I don't know if you have any like more updated numbers, but the last number that I saw, that an average rental, like a 2-bedroom rental in like the Hamilton area, was about $2,200. Like, is that kind of like roughly what you're seeing as well?
Yeah, we are seeing up above that 2,200 mark. I can pull up the exact numbers right here from our house Sigma. Let me pull this up,
because I think that's where a lot of people are. Like I said, they're kind of falling into that, yes, I can't afford to buy, but can I really also afford to rent, right? Because of that demand of how high rentals are right now.
Exactly. So in Hamilton, I just pulled up House Sigma, the median rent price. As of August, the median rent price in Hamilton is $2,400. And that's for all property types. So that includes detached, townhomes, condo units, apartments, which is pretty significant, because even just 10 years ago at this time, it was 1,400. Wow. So we've not doubled. We're going to be doubling soon, but we've went up a full $1,000 in 10 years.
Basically $100 a year, basically.
Yeah, and that's per month, right? So that's $12,000 extra per year. I don't think people's incomes have increased that much.
No. I actually read a thing a few weeks ago, and it was actually like, it was kind of eye-opening to me that basically, if you look back at the worst economical era in human history in the 1930s, they were comparing like a bunch of different stats. So basically like people's wages, home prices, car prices, grocery prices. And it was kind of shocking that if you take the 1930 stats and you inflate them to what they should be today, we actually are technically living at a much farther behind pace than what the 1930s were living. So to me, that was very shocking, because we all think like, what was the worst time to live in the economy? 1930s, right before or right after World War I, and then basically obviously the Great Depression. And I was just like, I couldn't believe like the stats and how they inflated them, and I was like, that doesn't even make sense. Like,
Yeah, really.
we almost should be talking about a big point that I've brought up to a lot of people
Yep.
is from from an actual definition standpoint. If
Sure.
you want to look at it, technically, we should be in a recession right now because over the last 2 quarters, we have seen a decrease or what they call, I guess, a negative growth.
Growth. Yep.
And they're even predicting that Q3, which basically I think ends in September, which will be this month. So at the end of this month, we probably won't get this data until October or November. It's probably also going to have a negative growth. So it's funny that, again, we're in this time where the economy is so unstable.
Yep.
And like I said, from a definition standpoint, like realistically, like we should be in a recession.
Yeah, I mean, absolutely. It technically speaking, if you want to go by the technical definition of 2 consecutive quarters of negative growth, that is a recession. I would, if people don't want to go by that, because a lot of people, for whatever reason, were not using that technical definition, especially in the United States, just previously. But what I would look at is just inflationary pressures. And what do you hear around you, right? Because everyone that I talk to is struggling in some way. And that is sort of an indicator of a recession for me. Now, that is anecdotal. But with that said, I guess on the other flip side is that normally in a recession, we do start to see unemployment tick up. In other words, we see more people unemployed, but that's not really what we've been seeing. We've been seeing employment numbers just completely stay steady. And if somebody loses their job, they can easily find a job somewhere else. So it is a bit of a weird time. All of the majority of the indicators would point towards a recession. Even looking back at what I mentioned earlier about interest rates being not at this level since 2001, right? And that was right around the .com bubble there.
Yep.
So if it's funny that we're seeing a lot of these indicators sort of point towards a recession, but then people are still working and the economy is still sort of moving on. So I would say it feels like a recession, but we're not there yet. We're not there yet. But anything could happen, especially with interest rates being what they are.
It's a good point that you brought up the whole employment thing because, yeah, it's very true. Like, we haven't really seen a very unstable unemployment rate. Like, the unemployment rate's kind of stayed solid throughout the last few, like, even year, I would almost say. I would say the only kind of industry that's really felt a big change in employment rates is maybe the tech industry. I have a few friends that are in the tech industry. So, like, I know Amazon has laid off thousands of workers. We've had like HP recently did that as well, like a few months ago as well. So maybe like the tech industry, you might have that. But like I said, looking anywhere else, like I go out, like you kind of go anywhere, you go to the grocery store, you go out for dinner or anything like that, you see like everywhere is looking to hire right now. So it's a funny kind of pattern where normally, like you said, you would see unemployment go through the roof, but we just really haven't seen that.
Yeah, I mean, it also has to do with demand too, right? So people are still spending, and normally in a recession, you'll see people reduce their spending because they either lost their job or their expenses have become too high. So whether we're just not there yet or that might not even happen, people are still spending like crazy. People are going on vacations. People are able to, eat out. People are able to enjoy leisure activities. We're still seeing all of those indicators not tick up necessarily. There's a good chart that RBC puts out regularly, sort of indicating these things, but we have seen them sort of stabilize and they're plateauing sideways as opposed to going up or down. So yeah, as long as people are spending, that means that work is going to be in demand. People are going to need workers. Like you said, everywhere you go, at least in Canada, we are seeing help wanted signs. And so that's really it's a good sign and a bad sign, because it's a good sign that people are still able to work, still able to make money and provide for their families. But at the same time, when you do see this type of spending from people in the economy, we get to that inflation problem, which is what we've been seeing. And the inflation was really out of control last year, up until even 4 or 5 months ago. But now we start to see that starting to come down, which is good, because inflation doesn't just hurt a few people, it hurts everybody, because it's devaluing your money and all of your savings.
Something I want to bring up that you kind of mentioned very quickly was the whole .com thing.
Yep.
Do you think obviously in the more modern world where we have all this technology and I can go on social media, do you think that obviously plays a part in the whole spending thing? Because a thing that I brought up with someone recently, it was last week actually, I brought up the whole motion of like FOMO, right? Fear of missing out. Do you feel like obviously social media plays a part in that, where like maybe before we had all this social media, people maybe would be more scared to spend because they really just got their news like from like obviously mainstream news at that point. But now you have social media. So basically, I don't want to say you can fake it on social media, but a lot of people do, is where they can just post these luxurious vacations and all these things that they're doing. And then other people are like, oh, you know what? Like if they're doing it, why can't I do it? Right. So do you think that obviously plays a factor into why things might be a little bit different from the last time we've seen this kind of crisis to where we are now?
Yeah, I think that's probably one of the one of the reasons. I would probably say another reason is access to credit. So, you know, as we go further on in time, and as the Canadian economy continues to grow, people have more access to credit now than they ever did. In other words, you know, even up until that 2001, 2002 timeline, we can go all the way up to 2008 if you want, it wasn't as easy to come across credit cards, line of credit, home equity line of credit in Canada. In the United States, it was a little bit different because it was sort of embedded into the economy. But I don't think there was that access. And if you don't have access to that credit, you can't therefore spend. Even if you do have that credit, let's say you would imagine, oh, well, somebody might say, well, they have that credit, but the credit eventually is going to be maxed out. True, but over time you can start to pay that credit, especially revolving credit card or line of credit, back down and then reuse it. So just to sort of put more perspective on that point, in the 1930s when we saw the Great Depression, nobody really had access to credit. No normal person had access to credit. So if you just didn't have any money, you couldn't spend any money. And so the economy just basically came to a stop. So I think that would be one of the reasons. And I do want to bring up another reason that I think maybe not specifically spending in Canada, but I would say the stock market and the real estate market in Canada and the United States, I think this point applies to, is that, to your point about social media, there's more knowledge and education on the internet now that people have access to that they never had before. In other words, in 2020, when we saw stocks fall at the beginning of the pandemic, stock prices fall, everyone online was saying buy, buy, buy. Whereas in 2001, you couldn't just go online and find that out, right? There was no consensus online.
There was no Twitter.
Exactly, right? So there's always going to be now, in my opinion, from now on, the opportunity to go online and figure out, okay, everyone's selling. What's the community saying? Let's buy, buy, buy. And so I think there's always going to be some sort of baseline for at least real estate and stock prices, because people are going to realize, you know, I can buy, and there's somebody online who's going to be able to teach me to do that.
Yeah, it's almost like fantasy sports, right? You go like after the first weekend of the NFL, you go online and everyone's posting about like who you should pick up for week 2 of the NFL, like of the games, right?
That's right. And even just access. So, you know, you couldn't just go online and buy a stock in 2001. Well, I mean, there was a little bit of opportunity, but not to the average person.
No.
Now you had to go through a broker then. Now you just go on your computer, go on your phone, quickly log in, press a few buttons, and you bought a stock, right?
Exactly. Which
So,
again, I'm one of those people, right? Like, again, I might be a little bit different because I'm always like on it, like looking at it and stuff. I'm just very conscious about that. But again, like, great to your point. Like, yeah, in 2001, even going back to the 1930s, you just didn't have that access, right?
yes.
Like, that did not exist. And now it's just so easy to literally, I can just turn on my computer. I can do it all. Now, I would say kind of that to that point, are you really an expert on doing it? Probably not, right? There's obviously experts who do it, just like how I'm an insurance expert, you're a mortgage expert. I always recommend obviously going to an expert and doing it. But again, the education is there. You can go on YouTube and literally look up how to do anything on YouTube. And there's probably a 10, 15-minute video on how to do anything, how to build a home, how to wash your car, how to do this, how to do that, right? So the education levels are by far so much more advanced than they were even 20 years ago.
Absolutely. And just and access to that education, right? So although you might be buying the stock yourself, just to use that as an example, you can go online and find experts who teach that, right? Just like we teach insurance and mortgages respectfully. So even if you go on our website, tridentruemortgages.ca, we have the first time home buyer course. So where somebody may have not had any knowledge in how to get into the market before, now you can go on, purchase our course, and you can find all of the information you need in one place and then still go do it yourself, if that makes sense.
Yeah, how far we've come from basically like 20 years ago, like no one had a computer. And then now, 20 years later, our computer is literally this little 6-inch phone that we have in our hand that can basically do everything, right?
Yes.
So
yes, exactly.
It's crazy how far technology's gone, not only for like the good, but there's obviously also like a negative side to it as well.
Of course. I wanted to bring up, if you don't mind, you had mentioned the 1930s and how people, it seems as though it's harder to live now than it was then potentially. I had put out a tweet in response to a Toronto Star article talking about, we always hear a lot from the baby boomer generation. You should hear what rates were in our day, right? Rates were so high in our day.
This is a great talking point that I have too, but I'll let you finish.
So I saw an article like that, and it's true. Rates were very hard. I did a whole video on rates really were high. I did a whole video on interest rates and what they were in the 1970s, 1980s. But what I don't think a lot of those talking points realize is home prices were so much cheaper. Exactly. So I responded to this Toronto Star article, and I put the average Toronto home price in 1980 was $75,000. The average Toronto home price in 2022 is $951,000. Now, in and of itself, it doesn't really tell you much. Obviously, it's a huge increase, but it's over time. What we have to look at is what is the mortgage cost on that, right?
Yeah.
So then what I did is I put mortgage cost in 1980 at 10%. Let's just use 10% rate. 20% down payment was $550 a month. The mortgage cost in 2022 at that 10% rate, $6,900.
Yeah. So
it's not even apples to apples, right? Like $550 versus $6,900. That's just an insane increase. And so I don't really like when people talk about rates were higher back in my day, but I just wanted to bring that up to your point about what people are feeling right now in terms of expenses and how affordability.
Yeah, and you know what? It is a great point because I also bring the same argument up as I say, like during that time, the 70s and 80s, we saw rates like 15%. But again, 15% on homes that were under $100,000. Mm-hmm. Now you're looking at the average home price in Canada, I believe, was about $770,000 this year. Mm-hmm. And again, it's always up and down, right? But I'm going to just use that number because that's kind of the last number that I saw. Yep. But again, even if you put the 7-8%, especially with the stress test on, that's a way bigger number than what you had at an $80,000 home at 15, even at 15%, right? So absolutely. I think that's where a lot of people they get the misconception. Yeah, rates were a lot higher. Sure. But rates were a lot higher on homes that cost a fraction of what the prices are now.
Yes. Absolutely. Absolutely. It's not even an apples to apples comparison.
No,
To
not at
to be
all.
fair, to be fair,
No.
it's I hear that argument a lot because a lot of the times the people we're talking to are the baby boomers, or everyone has their opinion, right? It's just it's not really not a fair argument. I don't think I would say.
No, and I don't ever want to sit here and be like, "Oh, poor me," right? But you have to look at the facts, right? Those are the facts that if you look at the numbers, it is harder to own a home today than it ever has been. And
Absolutely, yeah. The affordability indicator it shows it's one of the hardest times to own a home.
so moving to something that I wanted to bring up,
Sure.
and I hear this a lot, and again, it's very hard to hear this kind of stuff because again, it goes away from the whole dream of like obviously owning a property and whatnot.
Sure.
How do you really take to when people, I don't know if you ever had this said to you, but how do
hmm
you ever take this where people basically come to you and say, you know what, for me to ever own a home, I basically have to wait until I inherit a property from someone that passes away?
Yep. Yeah. So that's a really good question. We have heard that a little bit, or instead of even somebody passed away, just never owning a home. And what I would say to that is, if you want to own a home today, and you came to me, and let's say you know had a minimum down payment or no down payment, and you had those complaints about home prices are too high, I would agree with you, and you know we could have that discussion. But if you came to me today and we discussed home prices, we discussed what you would need to do to buy, we discussed your down payment, what you would need, and in 3 to 5 years you came back to me and when you had the same issue, then I would be a little bit less sympathetic to those arguments or those complaints, because realistically, on a $500,000 home, which you can find in Southern Ontario around the Hamilton area, a 5% down payment is $25,000. Now, if somebody tells me they don't have $25,000 today, that's fine. But if, like I said, you come to me in 3 to 5 years and you couldn't save $25,000, we probably have some other issues. And I don't mean to say that for one individual by themselves. I am talking more for a household. So, you know, two spouses or a couple people living together. I definitely think if your household income is, you know, $75,000 or more, I would say even 75,000 or more, and you can't save $5,000 to $10,000 per year, there's probably bigger issues than you being able to buy that home. Now, with that being said, it doesn't mean that home prices are not out of control. They definitely are out of control because of the way the economy is sort of built, our immigration, our low interest rates, our low supply, but there always are opportunities to buy. So just to give an example, we launched our first time home buying course just in April, May time. And we've had a few people go through the course. Out of 3 people that have joined the course, 2 have already bought. So, and these were people that they had, you know, no indication that they would ever be able to buy. So there is that opportunity. And a lot of the time, you have to be flexible with where you want to move and what you will be able to, what type of environment you're okay with living in. I'm not saying that somebody has to buy something and that's their forever home, but in Canadian real estate, it is about being in the market, because the market is going to move regardless of whether or not you buy in. So it's better to be in the market. So that's just what I would probably say there. If you really want to buy and you come to us, just example, use us. There's obviously other really good mortgage brokers. But if you come to us and we give you that plan, there's definitely opportunities to buy. And if I use the $500,000 example, there's homes, I think the lowest price one of my clients bought at this year was just under $300,000. So there's definitely opportunities there.
Yep, it just all depends on like where you want to live and whatnot, right? Like it's
Exactly.
not going to be consistent across the board. You're not going to obviously you're not going to move to downtown Toronto and spend $290 on a home, right?
That's right.
It all
Of
depends
course.
on where you want to live.
Of course. And to that point too, I don't want to sound insensitive to say, well, then you have to move from Hamilton to, I don't know, Windsor or something, because that's obviously just ridiculous in and of itself. But there's something to be said about then looking at, okay, maybe I should rent then. And that's something we talk about with our clients is we discuss, okay, here's what it's going to cost you to purchase a home and live there. Here's what it's going to cost you to rent. And then also, where can you buy that home? If you can't buy it in an area that's going to be close to, where you work, where your family is, where you grew up, etc., then maybe you should be renting and maybe you should be looking at something closer to where you want to be.
Exactly. Like those are all things that you have to budget into your decision, right? And I feel like a lot of people almost don't really think about that. They think about the whole dream of obviously owning a home, but they don't look at the actual budget behind that, right? And I feel like it happens a lot with cars too. People go and buy a car and they look at, okay, the car price is $30,000, but they don't look at the budget behind that. The gas I have to put in, the maintenance I have to put into it, the insurance I had to put on it, right? They just look at the price tag and they think that there's no other fees or charges that come after the fact. They just look at what the price tag is and they don't ever fit into the budget of, okay, like what are these other things going to cost me down the road?
Yes, absolutely. And I think that's where, not to, toot our own horns here, but I think that's where yourself and me come into play for our clients, because you might not even know, you don't know what you don't know a lot of the times. If it's your first time buying a car or you're buying a different type of car or a different type of home, we come in and say, okay, here's what it's going to cost you face value, but hold on, there's X, Y, and Z that's actually going to add to that cost. And the car example, I think, is probably the best example because everyone just thinks that, the car payment is $500 a month. Okay, but what's the insurance in your area? What's the maintenance cost on this car? Are you buying a used car, etc. Right? So that is the easy example because not everyone's going to necessarily buy a house, but most people throughout their lifetime are going to buy a vehicle.
And that's points that I bring up to people all the time. I always say, you know what? Before you put pen to paper, let's look at what it's actually going to cost you, because there's so many factors that go into the insurance side of things that you don't, people just aren't aware of, because again, buying a car, buying a home are big, obviously, moments in someone's life. And again, sometimes that could be like, that could cloud your judgment, right? Like, I'm not going to lie. When I first bought my car, I was like, wow, I own a car. This is great. I can go, I'm free to do whatever I want. But it kind of clouded my judgment to, okay, well, how much is the insurance? This was before I was in insurance too, by the way. So I was very uneducated at that time. But like I said, I do find a lot of people, like I said, it's a big moment in people's lives, but the clouded judgment obviously comes into play because it's such a big moment that people do sometimes forget, oh, there's other costs to owning a car or to owning a home that, I didn't really think of when I budgeted this out.
Yes. Now, this is a question for you specifically because it is your industry. Do a lot of people call you and say, what will my insurance be? Do you find that happens, or do they just buy the car and then they're saying, I bought a car, I need insurance?
So I would say it's a 50-50. I would say for the clients that I currently have, I would say it's the opposite, where they call me and they go, I'm looking at this car, what would it cost? Because again, we have those educational touch points. And like I said, I'm very hands-on with people to make sure that they're making obviously good financial decisions. From the clients or from potential clients that are calling in, like I said, it's kind of a 50-50. Like some clients are really good at understanding that obviously insurance is, there's so many factors into it. And like I said, then there's other people that they get that clouded judgment of they just buy it and they just don't really think of the insurance and what it's going to cost, right? But again, that's where we come in and we kind of say to them, you know what, listen, like this is what it's going to cost. Like I could have told you this before you bought. And again, it's a good learning point for a lot of people, right? Because then moving forward, they can, when they buy another car or they buy a home or whatever it might be, they can go, you know what, I made that mistake last time. Let's not make the same mistake again.
Yes, exactly. And it'll, even if they really need to purchase a car, I think then you can end up helping them decide on maybe even the type of vehicle. Because if insurance is going to be $500 on this type of vehicle, but on this one it might be $300, then you can start to help them decide on the vehicle even.
Exactly. And again, like at the end of the day, I always say to people, you got to buy what you love to drive or what you want to live in. At the end
Sure.
of the day, like I can make my suggestions, but if you're going to buy something, buy it because you love it. Because
Yes.
realistically, especially in a new car, you're going to be in that car at least 5 to 7 years. You're
Mm.
not gonna hate your life every day driving a
Yeah.
car for 5 to 7 years, and you'd be like, oh, you know what? Like I wish I bought this, and then a year from
Yes.
now you go buy a new vehicle and you roll this negative equity into a new vehicle. It just doesn't make sense, right? So, like I
Yep.
said, at the end of the day, like yes, I make my suggestions, but I always say, you know what? Buy what you want to drive, and like I said, sometimes like you have to pay more for those things, right? Like if I
Mhm.
suggest a 2006 Honda Civic and you say, well, I don't want to drive that. I want to drive a 2023 Audi A5. Well,
Sure.
there's probably going to be a little bit of a price difference there just based off the vehicle, right? But like I
Yes,
said, like if you want it, like sometimes you just got to pay for it, right? And
you
like
do.
that
You
just
do.
it
And
just is what it
budget.
is.
And
Yeah,
it's okay to budget, because we all find things. I see this a lot with homes and home expenses. We all, a lot of the time, have the ability to purchase what we wanted to purchase. Let's say for furniture or upgrades or whatever it is. It's just how important it is to you, right? Because are you willing to cancel your Netflix subscription? Are you willing to stop this habit of going out every weekend or whatever? I shouldn't use the Netflix example, by the way, because that was used in the government and it's only like $15 a month.
yeah.
But,
The
so
$200 that you're saving from that's not doing a
much.
whole lot.
That's not much, but there are other expenses, because even sometimes I will talk with people about saving up, and they say they are having a hard time saving up, but then I see them on a trip, right? That costs them $10,000. Well, if you just save that $10,000 2 years in a row, you would have had a pretty significant down payment. So it's all what's important to the person and how focused they are on achieving that goal, achieving that objective. And in your case with vehicles, are you willing to allocate the money towards the vehicle as opposed to something else?
Exactly. And I'm not going to sit here and say we're all perfect humans. We obviously all have our weird little spending quirks that we have. Like for me, like
Of
I
course.
spend a lot of money on on golfing. Like
For sure.
it just is
For
what
sure.
it is, right? But it's not like I'm going out every day and being like, oh, I need new golf clubs and it's $2,000 every time I go and buy new golf clubs, right? But
Yeah.
I just think obviously you have to make sure what's important in your life and kind of what your goals are, short term and long term, and then like I said, just build from there, and things will come to you, right? But
Absolutely.
if you have this outrageous spending where, like I said, I know a lot of people that they go out like every weekend or
Yep.
twice a weekend, and they're at these $200 dinners, and they go to the bar, and it's $100 for drinks. And it's like,
Sure.
well, that's $300 a week, times that by 4, like you're already $1,200 a month just on doing that kind of stuff, right?
Absolutely. And we're not saying
I'm not
people don't have to live.
exactly. I'm not sitting here and saying don't do those things because you're a bad human if you do that. But if your goal in life is to own property or own that dream car of yours,
Yeah.
maybe doing those kind of things every week is not going to get you to where you want to be.
Absolutely. It just means reducing a little bit. And I would say it's not even something about buying your dream car or buying your dream home. You would even have to just look at, man, everything is expensive now. Groceries, gas, you name it. So I would say you would probably have to just reduce those things to just afford the essentials at this point, which is probably more important for you and your family. You know, being able to eat well at home, being able to get where you need to go. Those are super important. And with all the other things rising in price, it's never been more important to look at your budget, look at your annual income, look at your annual expenses, and sort of go, okay, this is what we can deduct. This is what we can change, and go from there. Now, there are some people who are going to be on fixed incomes, and that's completely fine. But for those of us maybe who are on commission or who can take some overtime, who can work a little bit more, you have to look at those things. So we, for example, give a household budget calculator to our clients, and it just helps them sort of identify what you are doing today and what you can change for the future. And a lot of times people don't realize it until they see it on paper or on, the Excel spreadsheet of what money is coming in, what money is going out.
the last kind of topic I wanted to go off of before we kind of wrap things up is obviously
Sure.
we're going into Q4 already. Can you
Yes.
believe that? What would you say you predict moving forward into Q4 and maybe in the early stages of 2024? As we already have seen, the Bank of Canada has already basically said they're making another announcement in October. But kind of what do you see moving forward, at least for Q4 and then maybe Q1 of 2024?
Yeah, so that's definitely a good question. In terms of interest rates and what's happening with real estate in Canada, I would say that it'll all depend on our unemployment numbers going forward and the inflation. So our inflation has dropped to 3.3% in July. We're going to be seeing the August numbers come out September the 19th. The inflation number will really have a big impact on what they do in October and going forward. For those people who are in the camp that interest rates are going to be falling in the next 6 to 12 months, I would caution you, because unless that inflation number really falls or stabilizes, we're not going to be seeing interest rates fall at all. And so we could even see them go up if we see inflation start to rise, which it really could, with everything increasing. So I wouldn't say interest rates are going to fall anytime soon. With that said, in the next 2 to 3 years, should we see the interest rates fall? Absolutely. Just because I don't think people can afford too many more rate hikes, or even the interest rates to remain at this level for extended periods of time. So building on that with what's going to happen in real estate, like I said, we saw real estate prices fall from last February until about, February, March, April of this year. And then we saw them start to increase again up until about 2 months ago. And so I would predict that if the interest rates remain high, we'll see the real estate market probably just remain steady. And I don't think we're going to see the major crash that a lot of people are discussing. Some people really are I'll wait for the crash to get in. Prices are going to fall 50, 70%. I just don't see that, because really two reasons. Supply is so low in Canada for homes, and demand continues to be high. So not only is demand high, but we are bringing record number of immigrants into Canada. And, politics aside, good thing or bad thing, it's just true. So those people coming into Canada need to live somewhere, whether that's in the rental market, whether that's in the buying market. And so if we see a lot of those immigrants that are coming in looking to buy, well, that's just going to push demand even higher, and we already have a low supply. So I don't see the housing market falling much further from where it is today. I mean, anything can happen, but I don't think we could see any 50, 70% decline any further. And that would be my prediction sort of going forward with what's happening with real estate.
Yeah, it's such a double-edged sword, because I agree with your point. If you're bringing in X amount of immigrants in every year, obviously that puts a pressure on not only real estate, but a lot of other things in life. But I think to the argument point of that is that if you actually look at it from a standpoint, like Canada technically does have a dying population. So if you don't bring in those immigrants in, Canada has a declining population, right?
Yes.
So it's, like I said, it's such a double-edged sword, because no matter what you do, you're kind of you're gonna make people unhappy somewhere, right? And there's gonna be, and for this case, one industry is going to benefit, one industry is not going to benefit. You're not going to be able to play peacekeeper for every single part of life, right? So that's kind of the double-edged sword to it.
Yeah, we need immigration, and we need skilled individuals coming into Canada. That's absolutely true. The Canadians that are here right now just are not having enough children, and we need to be able to sustain the population. So I see why they're doing that. Maybe they're doing it at a too quick a pace, and their vetting processes are overwhelmed, but we do need the immigrants really as much as possible.
Exactly. Because like I said, with a dying population, that only puts even more pressures on things, because and we're kind of seeing this right now where the boomers are getting to that point where they're aging, and a lot of industries are losing them because they're retiring or they're passing away, right?
Yep. Yep.
And we're getting to that point where like there's a lot of jobs out there that we're going to be in the next like 5 to 10 years, we're going to have a lot of society problems because a lot of people just either aren't getting into these industries. The one that I always bring up is mechanics. Like there's no one getting into the mechanics industry because again, it's a tough job. It's a dirty job. People just don't want to do that anymore. Right.
Yes.
But we're going to have that problem where the older mechanics, like 55, 60, in 5 to 10 years, they're going to their late 60s, early 70s, and they just can't, like, we don't have anyone to replace them with, right? So
Absolutely.
it becomes a big issue if people aren't getting into that that
professions,
industry.
trades.
Exactly, right?
Yeah.
Even in insurance. I would say insurance too. We do have this big boom and I would say younger people getting into the industry, but we also have that big problem where a lot of insurance brokers and agents are aging. So where do all those people go if those people retire, right? Like it's not like there's a massive streamline of people getting into this industry, but there's also not a whole lot of people like leaving too, which becomes another problem where I know a lot of agents that are like 60, late 60s, early 70s, and when they want to call it a career, like what happens, right? Like, so
you're absolutely right. I was looking into this recently, just because of how important it is with the immigration and all the immigration talk. And for the baby boomer generation, you know, over 9 million Canadians are baby boomer generation. And by 2030, I believe that is the last year of the baby boomers being born. There's going to be some significant problems if we don't have those skilled individuals in Canada. And if we don't start training more and more up until that 2030 mark. Not to mention, back when I used to be a senior financial advisor, I would always look at how is this going to affect the CPP, the Canada Pension Plan in Canada, when there's more people on the pension in 2030 than people paying into it. So it's a tough issue, and I do see why they need a lot of that immigration. To your point, we just need those skilled individuals. We need a lot of tradespeople. We need a lot of help. You know, there's help wanted signs everywhere. It's gonna be tough, you know, from here on out. So I guess really Canadians just need to have a few more children per family. Per family. I know I'm trying to do that, so I'm trying to do my part.
But you giving that stat, that's an alarming stat, because if you're looking at it, if you're saying 9 million are in that category, that's about 25% of our population right there is in the next 7 years, basically coming to the point of either retirement or unfortunately passing away, right? Like where does that leave our like society, not only from a population standpoint, but from a workforce standpoint?
Yes. Most people don't realize how quickly a civilization, or in this case, a country, could collapse because of population decline. So not to get too much into this, but Elon Musk actually talks about this quite a bit, and how he's always talking about we have major population issues. Like if you look at South Korea, their birth chart is inverted. And you could easily, within 60 to 80 years, if you don't change how many people are coming into the country or the births in the country, your population, your country could collapse. So we really have to watch that. And so with all this being said, in relation to real estate, having that immigration is great for our country going forward. But for those people who are trying to get into the real estate market, maybe this is just an indication that now has never been the better time, because we're going to have a lot of immigration going forward.
I think that kind of wraps it up. What me and Mike usually did was we did like kind of like one point that you would take away from this episode. So I'll ask you, what is one point you kind of want to hammer home to everyone about this episode?
I would probably hammer home that what I think I just said, now has never been a better time to do anything really in your life, because things probably in Canada are going to get a little bit more difficult in terms of pricing, in terms of competition. So if you are looking to buy that home, start looking now. If you are going to get that car, maybe take a look now, because cars are scarce as well. And do what's best for you and your family. Try to build your skills, try to build your opportunities, and go from there. Yeah.
I would say for myself is budget, 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 because I find too many times now that when I talk to people, we are living way above our means. And the
Yes.
problem with living way above our means is if there isn't more of an economical, like, kind of down spurt, you don't want to get caught in the point of you're living over your means and then the economy just tanks. So I would say if you're not already budgeting, at least start budgeting now. And like I said, it's like you will praise yourself in 5-10 years, 25 years from now when you went, wow, like I was not budgeting, and then I turned around and started budgeting, and you know what, that really turned my life around. I'm not saying you had to, like, you can do it yourself, or ask an expert, ask a financial advisor, and just start getting some ideas flowing. And like I said, I think long term it will really benefit any person that's looking to kind of stay within budget, and like I said, build up some equity to buy that dream car, to buy that home, to go on that vacation, whatever you want to spend your money on. But like I said, you have to have a budget to be able to do those things.
Absolutely. I just want to add one thing to that too. A budget doesn't have to be this detailed every single cent you spend. It can just be, you know, annual income in, annual expenses out, and the major categories. So just know that, because once you see those numbers, you start to realize what's really going on.
Yes, we don't need no mathematical equation here about budgeting. Like, it's just,
that's right.
If it can be these little, just jot it down into a piece of paper. Some people do Excel spreadsheets. There's apps for these things now. As technology is advanced, we have those things.
Absolutely.
So, but we're not asking you to get a chalkboard and write every little thing down. Oh, I spent $1.25 at Dollarama and bought a pack of gum. Like, it's just, right. You don't need to go that in depth.
It's just as simple as going on your bank account. Now everything's digital. You know, download your last 12 credit card bills or your last 12 bank statements and average them out. What money went out?
And it's as simple as that. And guess what? No bank books anymore. Remember those? I don't know.
I used to bring my grandma to the bank all the time.
I know.
And she would get that stamp. She loved getting that stamp.
Yep. And those don't exist anymore.
No, that's right. Yeah, maybe that's a good thing.
But I wanted to thank you, Alex, for coming on again. I know both episodes you've given a ton of great talking points, great information for clients, listeners, and everything. But again, I just wanted to thank you for taking an hour out of your day to obviously come on, share those points. And again, would love to kind of have you on again as things kind of start changing into 2024 and see how things are going as the new year approaches.
For sure. No, I appreciate you having me on. I really enjoyed this episode. I think we talked about a lot of important topics. I know our last episode was also great. I know I had you on our YouTube channel as well, and I think that gave a lot of people some good information about tips for home insurance. So there's a lot of good conversations, I think, that come about us meeting. And so I'll definitely have you on our sort of YouTube as well again. And guys, if you want good insurance, go to James. I've referred people over to him, and he's definitely been really helpful.
Yeah, do you want to plug kind of like where you're from and what you're doing then, just at the end here?
Yeah, sure. I mean, Alex Leite, Tried and True Mortgages is our mortgage agent team in Hamilton, Ontario. You know, we help Canadians reduce the anxiety and stress in the home buying process, and help you get into a home and refinance and all home financing purposes. So yeah, we have our YouTube channel. You can just search my name, Alex Leite. You can also find us on our Instagram, Twitter, Facebook, triedandtruemortgages.ca, which is also our website. Sorry, I should say Tried and True Mortgages are our social medias, and triedandtruemortgages.ca is our website. We have our Mortgage Mastery Kit, which includes all of those calculators I was discussing, and those are all completely free. Our first-time home buying course, etc. So
perfect. Well, again, I appreciate you coming on. We'll obviously stay in touch to obviously see how things are moving forward into the new year and the final quarter of 2023. But again, thank you for coming on and taking the last hour or so of your time.
It was great. Thank you.
And thank you guys for tuning into this week. And like I said, a lot of changes coming down the pipeline, but just stay tuned. Like, obviously, I'll make them, post them on our socials and whatnot to kind of see what things are going to be changing moving forward. But again, tune in. As of right now, we're going to do monthly. I'll post those dates as we kind of get them. I know in October, We are going to be doing a later episode, so it's going to go out the last week of October, just with kind of some scheduling issues. So, but again, tune in, check out our social media to make sure when these episodes are being posted, and we'll check you guys next time on the Broker Breakdown.